Bitcoin just hit 100,000 US dollars. This is a huge milestone, but are you ready for what comes next? Let's dive in and make sense of your options. Hi, my name is Rusudan. I have been a CFO at Nomad Capitalist for almost 4 years, helping high net worth individuals legally reduce their taxes, get second citizenships, and go where they are treated best. Okay, so Bitcoin at 100,000 US dollars, this is a huge milestone, and it is a big trigger for all the investors and a call for action for them to take a next step and think about where they are right now and where they need to go. And I do think that this is a situation where you have to already have a plan in place. But if you are one of those persons who are just right now thinking about what to do, stick to this video and I'm going to tell you exactly what your options are and what you need to do to make sure that your gains are secure and as tax-free as possible. So let's first unpack the tax implications of this huge milestone. There are a lot of people who purchased Bitcoin at a very lower price, and now the value of the Bitcoin has risen to 100,000 US dollars, which is a very, very good opportunity, and like congrats everybody. But it does mean that you have to be a bit more prepared than maybe you were thinking about before. Because in like lots of jurisdictions, you are taxed on capital gains, and lots of jurisdictions consider and deem Bitcoin as the asset that you hold. So that means that if you, for example, sell the Bitcoin now, or if you used Bitcoin to buy some other services and goods, you are triggering the transaction that requires you to pay capital gains tax. Let's first start talking about what is capital gains tax. So capital gains occurs when you sell something that you have purchased for a lower price. For example, if you were lucky and smart enough to buy Bitcoin for $1,000 and now it costs $100,000, when you realize the Bitcoin, when you sell it or when you use it to get some other services or goods, you need to pay tax on the difference, on the gains that you have accumulated between the purchase price and the selling price. So this means that hopefully you have a huge gains there, but it means that you may be liable for tax. So it is very important for you to think about like where is your tax residency, which country is going to consider you taxpayer for those capital gains in, because different countries have like different rates and different ways that they tax capital gains, specifically for Bitcoin. For example, in the US, you are taxed at 33% for like if you hold it for less than a year. If you hold it for more than a year, then you are taxed anywhere between 0 and 20% depending on your income brackets. So there are different taxation jurisdictions, so it is important to know where you are and how your country treats capital gains for Bitcoin. For example, Australia taxes only 50% of the capital gains. For example, if you have if your capital gains for Bitcoin was 20,000 US dollars, you will only be taxed on 10,000. And you also have Canada also with like 50% benefit. You are only taxed on 50% of the capital gains. And for example, in the UK, you are taxed either at 20% as a normal taxpayer or 20% with higher rate taxpayers. And on the other side of the spectrum, you have countries that do not necessarily tax capital gains. For example, specifically for assets held longer than 1 year, Germany doesn't have any tax. You also have Singapore that they do not tax capital gains for physical people as long as this is not deemed as a business activity. If this is considered your business activity, you may be taxed, but if it's not, if it's just like some small thing that you're doing, even if the gains are high, you will not be taxed there. So as you see, there are different countries where you have the opportunity to maybe enjoy better tax brackets and better rates for your capital gains. And I do think that once you have this accumulated wealth from these transactions, it is important to make sure that you have action plans set in place and you know where to pay tax, or if you have to pay tax at all. One other thing that I think is very important now that we've reached this amazing milestone is to make sure that you plan the transactions that trigger this tax. For example, when do you sell? How much do you sell? Because we've had clients where we had this like a very interesting strategy of like planning out the sales of the Bitcoin to make sure that the revenue was spread out in a way where you didn't reach the like higher range for like the tax brackets. For example, if you maintain your gains at a certain level, you do not have to pay more tax. But if you are over different levels in different countries, you may be a higher rate may be applicable for you. So just planning that accordingly really can save you some tax bills. So if we are talking about crypto-friendly countries, I think that El Salvador is one of those that maybe should come to your mind, because it is the first country to deem Bitcoin as a currency that you can use in trade. And they also have a citizenship program that you can pay with Bitcoin, which is, I think, not a lot of countries do that. I would say it's one of the very few. In addition to the poorly tax point of view of how to treat your gains and how to plan potentially your gains, maybe you will think about an opportunity where you do not sell everything now, or maybe you spread it out along some period of time, or you make sure that you also hold Bitcoin for a longer period, where if it's longer than 1 year, you are, as we see, taxed at a lower rate. In addition to that, I think it is very important to choose the correct residency, and tax residency especially, and also think about some crypto-friendly countries. For example, UAE is rather crypto-friendly for natural persons, because we have lots of high net worth individuals go to Dubai, for example, where they realize their Bitcoin gains and all the wealth that they have accumulated through being an investor in Bitcoin, and make sure that they have a better lifestyle there, because you can technically fund your better lifestyle with the Bitcoin gains. And I do think that Dubai is one of those countries where it's very crypto friendly, very open to those opportunities. But again, you do not have to forget which kind of tax bill you have to pay, because just you moving to Dubai, or even not moving, just going there and maybe going on a shopping spree or something with your Bitcoin, it doesn't mean that you will not be eligible to pay tax anywhere. And I do think, as a quick final note, we, from our experience, from my personal experience with some of our clients and the work that we do for them, it is very important to also think about the exit, because in some situations maybe you're planning, you see good opportunities, and you're in one country, you are a taxpayer in the UK or something, and you want to, there are good opportunities, better opportunities, and some tax saving opportunities for you out there. So you have a good plan of where you want to go and what kind of steps you have to take to just reach your goal. But don't forget that you need to exit your current country correctly, and in most cases you have to pay some tax upon exit. So it is very important to know that, because we've had I cannot even count how many cases where people didn't kind of missed that step, and it means that your perfect plan of what you have to do once you're out, it's there, it just you are not correctly moving in the correct direction. You didn't take all the actions that you had to in your home country to make sure that you do not owe anything in tax bills. And I've had some people say that, nobody knows, how would they know if I don't pay something here? Generally they figure it out at some point, and in most cases when you are applying for a tax residency, or when you are establishing your ties in this new country and new jurisdiction, you do have to share and declare some information, inform them about what was happening before that, and somewhere in those documents, somewhere in your answers to the questions that they have, it's going to pop up, you exited the UK without properly paying all the taxes that you had to. So I would be very careful with that. I would be very cautious about the transition from one place to another, but I do think that this is a very good problem to have, and if you want for Nomad Capitalist to help you solve that, please go to nomadcapitalist.com/apply, and we will be happy to further assist you.